Hey everyone, welcome back to Crypto Cash. Thank you very much for joining me here. We're going to take a quick look at Ichimoku Cloud. I want to kind of walk you through some of the basics here, of course, so you understand a little bit more effectively how to use this to your advantage. Now, I've found the most, benefit from the 1 hour chart. So it can still be applied to a 4 hour chart, technically even longer. It's just that the 4 hour chart is it's moving slower, and sometimes you need a little bit better price action, which the 1 hour provides to get those results you're looking for. So again, long-term swing trading, 4 hour charts perfectly fine, but majority of the trades that I take are more short-term swing trades, somewhere in the range of anywhere from a week upwards of a couple of months. But if you're looking at 6, 12, etc., however longer months, or perhaps even years, then the 4 hour or 1 day chart would still be effective. Okay, just keep that in mind. Again, depends on your overall goal, but I think the 1 hour is the most effective in the sense of the fact that it's more versatile and more dynamic with the price action that we like to look at. Okay, so just keep that in mind. So we're going to look at the 1 hour chart to effectively understand what this looks like. Now, Ichimoku Cloud has three components. Technically, there's four components, but I break it down into just three ways to understand it. You've got the cloud, you've got the lagging span, and of course the conversion line slash baseline. So let me go ahead and explain first of all how to use this if you don't already have it installed. So first of all, you go to indicators. I already have it set as a favorite, and you simply type in Ichimoku Cloud, Ichimoku Cloud, right? And that'll provide you with a result that looks just like this when you go to the settings, all right? Now, I disabled lead 1 and lead 2 based on the simple fact that it just kind of creates that little extra line around the cloud, and I don't really care for that. But why don't we go ahead and enable this so you can kind of see what this looks like. Now, it looks pretty messy at first, of course, but if you don't understand what everything means, then it is going to look like that. Eventually, it's going to speak to you in different ways, and you're really going to like the way that it looks in time, right? So first of all, let's go to just the setup here so you have the same exact format that you're looking at, the same thing. So when you enable it, it should have all five, what is it, 1, 2, yeah, there's 6 actual, indicators, right? Or 6 check marks for under style here. So conversion line, baseline, lagging span, lead 1, lead 2, and plots background. So I disabled lead 1 and lead 2 just because it looks a little cleaner, where you can only see the cloud, and what it would look like is this if you were just to use only the cloud. Okay, that's essentially what it would look like. Now, the cloud is perfectly fine. It's good to use that as kind of an understanding of where the price action is. Price above the cloud generally confirms a buy signal. Price below the cloud, more so a sell signal, right? Or a short position. But it doesn't always work exactly like that. You want to kind of use these other indicators to help kind of seal the deal, because just the cloud alone is one thing. Obviously, you want to use that in conjunction with other indicators. I recommend the 4-hour MACD moving average convergence divergence. However, in this regard, just say you're only going to solely use the Ichimoku Cloud, you'd want to use all the indicators present within. And the reason why is because it's a good, healthy, conservative type of trading style, right? It helps you get confirmation when the bulls are in control and get out before the bulls lose control, essentially, for a long position. Inverse applies as well for the downside. That being said, how you want to set it up normally, in my personal opinion, it works the best if you have the conversion line, the lagging span, and the baseline all enabled. Right? So disable the leads. Obviously, you don't have to, but it just seems a little less intrusive when you do that. And then obviously leave the plots background enabled, because that is essentially the cloud itself, right? So now that we've kind of understand how that works, we want to look at a few different things. So first things first, if you're going to take a long position, right? And we'll just kind of go with the set of, this being a long type of position, right? In other words, you're going to buy low and sell high. Most of us do that. So in a scenario like that, when you're going to buy low and sell high, what you want to do is first is you look at the cloud, right? And it's this little red cloud here. Of course, green is fine too. Don't let the color kind of confuse you. It's all effectively, beneficial, if you will. It just, kind of lets you know if it's on the upswing or downswing. But generally speaking, right now, we see the price action below the cloud. Therefore, it's going to be considered as a potential resistance, right? So both of these leads, these two lines, can work as a resistance for the cloud. Okay, so that's generally how you look at it. So first things first, you look at that here. If you're the buy the dip kind of person, obviously different scenario, but it's best never to try to chase the bottom, right? You want to find it when the price action is moving in the direction you want to head. Right here, we do not have that confirmation, so you would not want to take entry. The second reason why you wouldn't want to take entry here is based on the simple fact that this blue line, which is the conversion line, is intersected with the baseline. In other words, it should be clearly above, not below the baseline, okay? So once again, this blue line here should be above the red line. Now, I'm fairly confident that I changed the color setup here, so you might need to change this to the same setup as me, because the baseline is essentially, it should be red in my opinion, because it kind of helps you understand that's the bottom. And then of course I have the conversion line, the blue line, that should be above, okay? So blue should be above the red, that's the general concept. And if you look at this here, you can see that there is no blue line here, right? The blue line is basically concurrent with the price action, therefore we don't have a buy signal. It should be above to see that, okay? The third buy signal is for the lagging span, which is this guy over here, this green line. It should be above the price action. Now it is above the price action, but it's very, very close, right? So it's kind of concerning in that sense, whereas it should be free and clear. It should be somewhere higher up, like right around here, for example, because obviously the price will be higher up as well, breaking through the cloud, essentially giving us that buy signal. So for me, being more of a conservative trader, I traditionally try to look for all three to happen at once, or to be active at once. Now we'll look at an example here in a moment as to what that should look like, but this is an example of what it shouldn't look like, right? Basically we're only checking 1 out of 3 boxes here, and what that would be is this lagging span is free of the price action, and that's the only thing that we see here, right? Price below the cloud, no buy. Conversion line concurrent with the baseline, also no buy, right? It's similar to a MACD convergence where you want to have the 12-day exponential moving average intersecting with the price action, up, if you will. It should be higher than 26. In this example, that isn't the case. Therefore, we don't have that signal, okay? So we only have 1 out of 3 signals. So do you want to take an entry based on 1 out of 3 confirmations, or do you want to have all 3 present? Preferably all 3 at all times, okay? That's the general concept of how that should work. Now let's look at an example of what it would look like, obviously, if we have a better case scenario, right? And this is an example here of a better case scenario. Now it's not perfect, but it is good. All right, and here's the reason why. First of all, let's go ahead and make this a little bit bigger so you can see this. And generally speaking, first check mark, right? We can see the price is clearly above the cloud. It's stayed there for about 3 hours now. That's a good sign, because sometimes taking entry on a price that breaks above the cloud instantly is a little premature, right? It'll break, oftentimes it'll break, and then the candlestick will close below, and it'll stay below the cloud. So step number 1 is to clear the cloud, which we've done here in this example, okay? So we can see we've got about 3 hours worth of momentum that is trending above the cloud. That's check number 1. Check number 2, we've got this conversion line, this blue line here, that is well effectively above the baseline, okay? So it should always be above at all times. And if you look back here, of course, you can see right here where it took place, the blue line broke above the red line, and it's essentially been above ever since, okay? So those are all good things, right? We like to see that. Furthermore, the very last check mark is the fact that the lagging span here is free of any price action, right? So it's not close to the price, it's far enough away where we have probably a good at least 12 to 16 hours before it intersects with the price action here, or if nothing else, just say maybe 8 hours before the price comes down and intersects here. But I'll tell you what, the sell signals for Ichimoku Cloud is 2 things, right? It's not necessarily the price traveling back into the cloud, because that's okay if it does that, because now the cloud is working as a support level, right? So just say the price travels down here, it could work as a support. Price travels down here, that could work as a support as well, okay? So the cloud is, now that you've passed that threshold, you don't need to worry about it. That's essentially a double support in a sense, right? You've got 2 lines that are kind of working as a support level. But what's important, what's the signal is for you to want to exit your position, is when the actual lead intersects with the conversion line. So just say, for example, this continues to digress, and this eventually comes up. Right there, as soon as they intersect, is considered a sell signal, okay? Also note, when the lagging span intersects with the price action, also considered a sell signal. So you've basically got 2 indicators that are letting you know when to exit your position, right? And the great thing about this is it helps you with momentum in a sense, where it helps you identify when the bears are taking control and the bulls have lost control. It's almost like a MACD convergence live on the price action. It's kind of the best way to understand it. So the reason why that's helpful, of course, is because you've got quite a few different scenarios that you can kind of identify. So whichever happens first, mind you, whichever happens first is the indication of a sell signal. Now, don't get me wrong, this isn't 100% foolproof. There's cases in point where it will give you that signal, bounce right off, and continue to go upwards. But you're still going to be able to exit your position profitably, and there's no downside, you could say, as long as you follow these parameters provided here. Okay, so hopefully that makes a little bit more sense for you. Once again, the inverse applies as well for short signals, right? So the good way to identify when there's going to be a potential turnaround is occurring is when this happens only the inverse, right? The lagging span runs into the price action, you're at a close bottom, you're bouncing off of support. There's a lot of cases in point where that happens and you can kind of identify a turnaround. But for right now, this example is perfect, kind of letting us know that we are essentially all three check marks in the box there until this conversion line intersects with the baseline or the lagging span intersects with the price action. We have pretty much open door right now. We just leave the position open until that happens. That's how it works. It's really that simple. Now, again, I know it seems confusing at first when you're looking at all these lines. Maybe you could potentially at first just start using the cloud itself as a good indication. And then once you see that, start enabling those as you go along. So, for example, okay, great, price is above the cloud. Then take a quick look. Go ahead and enable the lagging span. Oh, great, excellent. We're good to go there. And then, of course, you can enable the last two and identify that you're well above the price action and you're good to go. So that's essentially how the Ichimoku cloud works in a very simple, easy to understand kind of way. There's obviously different teachings out there, but that's the way in which you want to kind of remember it. You've got some really cool indications here. Just make sure that you take entry when you have that full-on confirmation. Preferably all three is ideal. Obviously, if you're chasing the bottom, it's a different story. You cannot chase the bottom concurrently and use the Ichimoku cloud at the same time. Right? They just don't work together. The cloud is designed to help you understand that you're moving in the same direction as either the bulls or the bears. Right? So the sooner you understand that, the better, the more successful you'll be. You have to be a little bit more patient with the Ichimoku cloud, and oftentimes it can give you some breakouts, and then the price comes right back around because something happened in the other part of the world, and Bitcoin lost its value. Right? Those things happen, but until you get there, use this. I would recommend using paper trading as well to kind of get the feel for it. See if you like it before you try using it with your own real money. But I can tell you that this does lead to a lot of my higher success based on the simple fact that it's more conservative and it almost ensures profit based on the fact that you're going to find less opportunities with the cloud. In other words, it's not going to always be signaling a buy signal. But when it does, more often than not, you're going to be able to take a position comfortably and you'll be able to get a price to the upside. Right? So I hope you found benefit here today. Of course, comment below if you did. If you have other indicators you want me to go ahead and cover, definitely let me know as well. I'll be rolling out with a new one every week, and we'll go ahead and take it from there. I really do appreciate your time here. We'll look forward to seeing the next one. Have a good day.